Let us see the analysis of the company, another PSC company. There is a monopoly company in the mining sector. There's NMDC Ltd. So NMDC is trading at 109 levels. It is actually engaged in the production and distribution of iron ore along with the diamond, and it actually engaged in the production and sale of sponge iron also. So actually has large mining, like the mining licenses, and actually operates many large mines in different parts of Chhattisgarh and many parts of India. So it is actually one of the leading PSC companies and one of the large monopoly companies, and has a good reserves in its disposal of for sponge iron, and it actually is posted very good results for Q4 of FY22, and if it posted a total sales of around 25,882 crores and then profit of around 9938 crores, with an EPS of 32. So based on the current price of 109, it is actually trading at just around 3 times its earnings, 3.39 times. The book value is 119. It's actually trading 10 rupees below the book value. Its dividend yield is around 13.6%. So it is actually giving a dividend yield of more than 10%. That is 13.6% is actually, if you actually see the bank industry, they actually give returns of only FD interest is actually only 6 to 7%. So it is actually giving returns more than double the bank FD interest rate. And the return on capital is 37%, and the return on equity is 99%. And market 31,826 crores. And this company, if you see the last year profit is actually improved. The net profit was around 6,253 crores on the sales of 15,370 crores. And the EPS was 21. So the EPS is all increased from around 21.34 to 32, and the profit has increased. There is a 3,000 crore increase and more than 3,000 crore increase in net profit. So if you see the performance of the years, the sales is actually increased over the years, and the net profit has also increased over the years from around 3,896 crores to the current level of 9,398 crores. So there is a good possibility that this being a monopoly company in the mining sector, have a large capacity of mining for sponge iron and iron ore, and this company might increase revenues in future also, and this might actually post a profit of over 10,000 crores or 12,000 crores based on the expansion plans that the company might have in the future, and might report an EPS of 40. So its shareholding pattern is also good, with the promoters actually holding. There is the government of India holding 60.79%, FIS holding 6.88%, the mutual fund holding is 21.8%. So mutual funds and FIS have a good percentage of holding in this company. So it can be invested at the current levels. But the thing is that based on the current market situation on the war between Ukraine and Russia, there is a possibility the market might correct. So this stock might also fall further. And once there is a confirmation on that, the inflation is actually cooling off in the world markets and India and in US and Europe. When the FA starts to buy again, all the stocks including NMDC might start moving up. But till then, there is a risk of loss if we are actually investing at the current levels. So we need to invest based on dividend yield of 13% is always a good investment. But there's a good possibility that the stock might even slip to 80 levels, not based on the fundamentals and the earnings, but based on the market correction. So if you're actually I am actually expecting the stock might actually touch around 150 to 200 levels in the next 2 to 3 years minimum. But there is a risk of the stock touching even 80 levels or even more lower levels if there is a further market correction. So any investment at the current level has to be based on the investors, based on the risk appetite of the investors, and they should keep a stop loss, and they should invest only in stages for getting good long-term returns.